Real Money Pros is brought to you by The Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates, the weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
Well, happy weekend to you. This is the Real Money Pros back again. We take about a seven-day hiatus until we are back here again every Saturday, live here for you. Live meaning you can interact with us. Give us a call. Phone lines are open, 979-59-MONEY. That is 979-596-6639. Visit our website, therealmoneypros.com. Use the Ask the Experts feature or use the chat feature if you have a question that you want us to answer live on air. Interesting movements in the market this week. I think we need a round of applause because we officially have an end to the 43-day U.S. government shutdown, concluding with a funding bill that will extend operations through January 30th, 2026. Now, I believe that we are going to go moving on to the Affordable Care Act. Obviously, conversations around the healthcare exchange, subsidized healthcare tax credits, and will these enhanced tax credits carry on into 2026? Obviously, there's going to be some time for us to get some clarity around that. In my opinion, we're looking at a bit of a mess. So I'll put it this way. If you are currently receiving a healthcare plan on the exchange, make sure you're paying close attention to the developments that are taking place. When this rubber hits the road, I would suggest that you plan to pay full pop for your healthcare premiums going into 2026. Prepare for the worst, and if we get a better than expected outcome, perhaps up to the 11th hour going into December, well, then at least you're prepared. So what am I talking about? I'm talking specifically about how back, I forget exactly what year it was enacted where there was enhanced tax credits, meaning it was all based on your modified adjusted gross income. If you earned $1 over that threshold, meaning you lost your tax credit entirely, which would help supplement your payments towards your healthcare premiums under the assumption that your employer didn't offer health insurance or your spouse's employer didn't offer health insurance, meaning you're going through the exchange, you're going through the state under the Obamacare, aka Affordable Care Act. Well, a couple years ago, they enacted what's called enhanced tax credits. So instead of there just being a cliff where if you earn $1 over that modified adjusted gross income and you lose your tax credit, it was a slow phase out. Just to give you an example, I'd work with clients that were pre-65, retiring early around mid-50s, and you could be earning gross income of around $150,000 and still get a tax credit towards your healthcare premiums. Wasn't very much of a tax credit. However, just gives you an idea of the amount of lateral movement you had to work with how much income you could receive. That is set to sunset at the end of this year. So meaning we're going to go back retroactively to where's that cliff, that drop off with the income. So again, something to pay attention to, but bottom line is we have an end of the government shutdown. We had some interesting movements in the market this week. A lot of people on Wall Street and investors paying closer attention to what you could call frothiness in the market, which you could argue is an overvaluation of these high-flying technology companies, meaning the companies that are hanging their hat on performance in the future, all based on their investment in artificial intelligence, AI. And that's really been the wave that a lot of companies have been riding on over the past years. And certainly if you've been investing in the markets, you've been participating in that enthusiasm, that optimism. But now there's a bit of an extra eye that's being looked at these and saying, well, is this hype really what it's all lived up to be? We've been seeing what you could argue some profit taking, maybe some rebalancing, maybe trying to capture these gains that have taken place in the technology sector, trying to diversify into other areas of the market. But again, what are your thoughts? Are you worried about the potential frothiness and maybe overvaluation of what we're seeing in stocks? And does this make you worried? We have some big drops in cryptocurrency, some big drops in Bitcoin. Does this make you concerned around the speculation that is potentially around the market? We'd love to hear your thoughts. Again, phone lines are open, 979-59-MONEY. That is 979-596-6639. I'm a big football fan. I'm a huge college football guy, huge NFL guy, Detroit Lions fan through and through, have been my whole life. People ask me if I'm from Michigan. No, just my first fond memory of watching an NFL football game it was Barry Sanders. And anyone who watched Barry Sanders play, I think they completely understand okay, I could understand why you would hitch your trailer to that team. In hindsight, probably a bad idea because they did go a season without winning one football game, meaning they went 0-16. But now, no one, if the Lions ever end up winning the Super Bowl, no one can call me a fair weather fan. I digress. It's interesting to.
I just walked in there. Wait a second. Is this a money show or is this what are we doing today? Is it sports? Okay.
Yeah, okay. But no, it's interesting because I'll watch all the pregame analysis, and you have these, legendary coaches, these legendary players, legendary commentators that comment on games, and they give their takes, they give their approach, and obviously there's going to be their calls, their predictions for the upcoming weekend's games or the games that are in front of them that specific day. And it's interesting because obviously they have good analysis, but generally speaking, they're talking about, hey, just don't turn the ball over. If this team, even though this other team is favored, if this underdog team cannot turn the ball over, they can stay consistent with that, they have a good opportunity to win the game. And it's like, well, of course. Like that's not a complicated take. And if you actually look at the numbers, statistics, and probabilities of a team, if they lose the turnover battle, meaning they're fumbling the ball, they're throwing an interception, the probability of that of them winning the game drops dramatically. And it just brought me back to thinking about markets and how there's an endless hot takes, again, of people who have been in the industry for a long time. I mean, proven track record of solid investors giving good advice. And they're going to give their predictions. They're going to give their hot takes. And one of the simplest things to look at is, if you see some turbulence in the market, and we certainly saw some this week, it's, hey, the investors that get rewarded are the ones that can withstand this volatility, meaning they're in it for the long term. And I'm thinking in my mind, I'm like, well, that makes sense. I'm not arguing against it, but I kind of bring it along the lines of these football commentators where it's like, don't turn the ball over. It's like, of course, if that team doesn't turn the ball over, their prediction, the odds of them winning, but it's much easier said than done. I mean, now you got the quarterback taking the snap, you got complex defenses, maybe you're under pressure, you throw an interception and your odds go to the wayside. Similar to you as an investor. You hear us talk about this a lot of the time, and this is just the importance of having a strategy, is that, yes, if you see some market turbulence, it should not affect your investment decision because your investment decisions that you should have already made should have been in line with the strategy, and that strategy should already take into account that we will see market turbulence like this. It's a feed of it. It's the
price to pay.
It's the price to pay. If you want to play football, you got to strap up the helmet, put on the pads, and you're gonna get walloped from time to time. This is what happens in the market. If you look at an average market year, just let's look at the S&P 500. I think you can. I forget the exact stat that it was, but you can expect a 1% drop on a per day basis, at least I think it was 26 or 28. So you can look. I mean, over 25 times in a year. Average market year, you can expect it to pull back 1% or more at least over 25 times. I think that's helpful to have that perspective because we're coming off some recent market highs. You're getting some extended valuations. You got a lot of hype in cryptocurrency. You got a lot of hype in these AI companies. What does this all mean to you? This should not derail your investment plan.
Kind of makes me laugh a little bit, Jeremiah, because I'm glad now, never glad that I walked in late for the program. There's a reason why I was late. I was on the phone with somebody that I hope will call the program. He's asking about business funding. So we'll get that phone call later. But nonetheless, I wanted to have that call. But when I walked in a little bit, you're talking about sports. And it's interesting because whenever you see after a game, it'll be the coach speaking or some of the players speaking. They'll say, so what happened? Well, okay, let's say it's a winning team. Oh, we went out there. We were really motivated. We stuck to our plan. We had a strategy. We knew the team's weaknesses. They're saying the same thing every time. The other team will be like, well, we made some key mistakes. We broke strategy. And next time we just got to try harder, right? Okay. Now just change this topic to markets. Yeah, we took some volatility and you take it, the markets were moving higher. Okay, here's the real message, which is, Okay, if you're watching the sports guy, you're in it because you're enjoying the sports and you've got an objective, which is it's entertainment, right? The markets are an objective in themselves. Like, if you're so worried about the day-to-day moves of a stock or economic moves into how it affects the markets, and you're looking at it how it's going to affect your investments and your trading, that's an objective. Otherwise, if you're in for the long run, why are you even watching the interview? Why just watch the game? Enjoy the game. That's the part. We've got a lot to discuss. I'm sorry I'm late. I'm Brian Wiley, part of the Real Money Pros with Jeremiah Bates. Phone lines are open, 979-59-MONEY. That's 979-596-6639. We're going to talk about markets. Hopefully we'll get the phone call about the business funding. We're going to get your phone calls about healthcare. I heard that discussion too, Jeremiah. This is Real Money Pros. We'll be right back. Make this year that you work smarter, not harder with Ataraxis. As your strategic partner, Ataraxis becomes an extension of your business, taking the burden of HR, payroll, benefits, workers' compensation, compliance, and staffing off your plate. You'll have more time to focus on operating and growing your business. Let Ataraxis handle the details so you can focus on what matters most. Learn more at ataraxis.com. That's ATARAXIS.com.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
This open enrollment, start making meaningful progress towards your long-term financial goals. Did you know that a health savings account, or HSA, is the most tax-advantaged account in the U.S.? Contributions are tax-deductible, which reduces your total taxable income. Withdrawals for eligible health expenses are also tax-free. And last, capital gains on investments are also tax-free. Did we also mention that it's free for individuals? Visit livelyme.com/pro today. That's livelyme.com/pro.
Now, back to the Real Money Pros.
We are back. This is Real Money Pros. I got to give Jeremiah a little bit of a break because last weekend I've had this long cold that's just been going on and on. But Jeremiah, thanks for covering the program for me and with me as he's a co-host on the program. I got to act like a better co-host and actually be here. 979-59-MONEY is the phone line. Now, as a fiduciary advisor, I got to tell you, it's worth paying for good advice and not having conflicted advice. You could find conflicted advice in just about everything you're looking for. Healthcare, all of it. Maybe they're selling some pharmaceuticals along with it, but that's not the case with a fiduciary advisor. Did you know that? So a fiduciary advisor to you can only act in your best interest. They charge fees. They don't sell products and earn commissions. How do you find one? Go to Apollon Wealth Management. It's part of the Real Money Pros, therealmoneypros.com, our network. This is what we're here and what we're here to do for you, which is answer questions. And you don't get a lot of questions answered on weekends when it's not a live program. This is a live program, so you can call it 979-59-MONEY or go online to therealmoneypros.com. Use the Ask the Experts feature. I'm hoping that I have a caller from Florence. All right, let's get to the phone lines, actually. We'll go right into the phone lines. We have Brian on the line calling out of Florence, California.
Hey.
Brian, thanks for calling the program.
Hi, good morning. Good morning. Thanks for taking the call.
Absolutely.
I got a question about Roth conversions. I'm retired. I've got a good little nest egg, and I want to start doing some Roth conversions in the near future. And I need to know the strategy for paying for the taxes with the money, either the money that you pull out, or is it better to pay it with money that you have on the side, like in from a bank savings account? What's the ideal way to do this?
Yeah, Brian, Jeremiah here. Great. I mean, obviously, if you've been listening to our program, we're huge fans of Roth conversions, meaning you can effectively thread the needle on what you're paying taxes now, get the tax bogey out of the way, get those investment gains inside of the Roth, and then eventually when you or your beneficiaries access that money, completely tax-free. So there's certainly some benefits to that. Now you're talking about effectively paying for it, because you're absolutely right. Whatever, a Roth conversion sounds great until you get that tax bill for the income you recognized from moving that money from pre-tax to Roth. So how do you cover that tax bogey? I am a proponent of using, like you said, money in your savings, meaning already taxed money, aka non-qualified money that's in your checking account and your savings account, because what that does is it keeps more money in your Roth, right? Because what the other option in which you can do this is you can elect Fed and state withholding from the conversion. So if you actually look at that transaction statement with wherever you hold your account, your custodian, you're going to see the gross conversion amount. And then if you elect Fed or state withholding, you're going to see an amount that goes to the Fed. You're going to see amount that goes to state. And then you're going to have that net number that ultimately ends up in your Roth. The downside to that is it's just less money in your Roth, which means it's less tax deferred gross. So if you have the ability to absorb that tax bogey through liquidity that you have in a checking or savings account, 100% I'm a fan of that. However, one thing that you need to pay attention to that a lot of clients that have been bringing this up to me over the past, I'd say, couple months or so, it's in 2024, they're receiving some small penalties from the IRS for lack of payment throughout the year. So one thing that I would caution, or something to pay attention to, is that when you look at all your other income sources. So Brian, are you receiving Social Security, any pensions, any wage income? Like, give us some insight to that.
Yeah, I'm retired. I get a pension. I'm getting like close to $90,000 in a pension. I have not. I'm 66, going on 67 in January. I have not elected to get Social Security yet, just because, I'm kind of weighing. I don't need the money, I guess. I'm in a fortunate position not to need the money, but I'm kind of waiting, maybe till 70 to get that 8%,
This is great.
increase per year.
This is great.
But
Yeah, you've got options. The cool thing is that the conversions is something you really should look at, and then time that with when you take the Social Security payments, because that's going to increase your marginal income and put you in through the brackets. With the conversions, let me ask you this question, which Jeremiah.
Yeah.
With the Jeremiah, so why not pay it going out of the account and using this pre-tax money to pay off the taxes for the Roth for efficiency? Are you weighing that as well?
Well, I mean, you could, but the problem is
I get it. You're paying. It's almost like you're having to pay the income taxes on the money that you just paid the taxes with.
But ultimately, you're going to have to pay money.
Done it either way.
Like either way, it's kind of six. Is like at the end of the day, you're gonna have to cover that tax bogey. So now we're looking at opportunity costs, meaning what bucket of money is going to have that you use to pay that taxes has the best net benefit for you. Here's the thing, Brian, you nailed it. You're retired, you're receiving a pension. The only way that you can effectively get money into a Roth IRA from this point is conversions. You can't do contributions unless you have earned income. So if we're trying to wring that chamois for as much as it's worth, then ideally you don't elect withholding. So then that entire amount that you designate as a Roth conversion, it's all inside of your Roth, meaning, let's imagine you did like a $50,000, maybe even more conversion, and you're electing Fed and state withholding. That could reduce that number. So, but again, one thing I would caution to pay attention to is that if you're going to make this action that results in you receiving more income, pay attention to withholding. I mean, through your pension, are you withholding Fed? It's like, I just don't want you to run into a surprise when you file your taxes for 2025. You're like, what? I'm getting penalized because I didn't withhold enough money. So that's where you could look at, maybe you make a Q4 estimated quarterly tax payment, which I think the deadline on that is January 15th of 2026 to do it for 2025. So there's some tax nuance to this, but sometimes that penalty is it's a moot point because it's so small and negligible. And obviously, and sometimes you got a better net benefit by just leaving your cash in maybe a higher earning account, like even maybe a money market or a high yield savings or even a CD for that matter. But again, it's just something where you don't want to be really caught off guard to say, geez, I'm getting this much of a penalty because there was lack of withholding. So take into account, if you're doing any federal withholding from your pension, that could add to that prepayment along the way. But just something that I would say take into consideration. But a huge fan of Roth conversions, and I would stick to if you have the liquidity and the ability to absorb that tax bogey with your checking or savings or non-qualified liquidity, generally that's a better route to take.
Can I ask another question quickly? Now, what would be how long would it take for me to recoup the money if I were to pay the Roth, up front when I pull the money out? Is it? I'm trying to fit. I don't understand the equation of how to figure that how long it would take for, versus paying it through money from my savings account, let's say. That the tax hit.
We got to first look at where did that money come from? It came from cash. So it's not earning anything. And then now you're competing with something that's probably invested, right?
Yeah. The savings I'm getting, I've got like 200,000 in the bank, and I'm, some of the banks are offering promotions right now. So, you come in with 200,000, they give you a cash bonus, and they give you 3.5%, 4%. So when they factor, I'm playing that game with the cash money right now.
We've got an answer for it. We're just running up on a hard break right now. We're going to go into that. If you're able to stay on with us through the break, please do that. We'll cover this in the next part of the program. Yeah, stay with us. Phone lines are still open, 979-59-MONEY. Plus, I know we're going to have a discussion about the discussion I had right before the program about business funding. This is The Real Money Pros.
Apollon Wealth Management has transformed the way our team delivers financial advice. With their support, we're more equipped and more empowered than ever to provide top-tier financial planning, investment management, and personalized financial guidance. Apollon has been a key partner in helping us achieve our clients' unique financial goals. Whether you're an advisor looking to enhance your client experience or an investor ready to take your wealth management to the next level, reach out today to The Real Money Pros by visiting therealmoneypros.com. Let's elevate your financial future today.
I'm Nick Daniels with Tree City Advisors of Apollon. My team and I help our clients implement tax-smart strategies because taxes are one of the largest headwinds your investments face. We use strategies like Roth conversions, 1031 exchanges, and more because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Begin your home ownership journey today. Look no further than Academy Mortgage, your first choice home loan lender. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Their team of seasoned professionals will be with you every step of the way. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high costs. We can either do your investments for you or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back, and we're going to go right back into it because we're in the midst of a phone call. I'll give you the summary in just a moment. We've got another phone call lined up. Plus, we'll take yours, 979-59-MONEY. And if you can't get through to us today, go to therealmoneypros.com. You use the website, contact us. We actually respond personally. You get a response usually very quickly as well from an advisor in a fiduciary lens, so it's good stuff. All right, so Brian, who is calling out of Florence, California, talking about Roth conversions. He's in a really good spot, good position at 66, earning pension income, has the option of when he's going to elect to start his Social Security pension, but now he's looking at IRAs and Roths and when to pay taxes, pre-tax. Okay, so the conversion thing, I think we decided. So the idea here is that while you have the ability to manipulate what kind of income you've got, it's a great time to consider conversions because you thread the needle, as Jeremiah put it, to make sure that you're landing in the right marginal brackets and paying the tax rate that you know that you may not be able to enjoy in the future any longer because your Social Security income is going to change likely your marginal brackets. Right, Brian?
That's correct. That's correct. I haven't collected it yet. I'm thinking of waiting till 70. I'm currently 66.
Are you married?
Married, yes.
And what marginal bracket are you and your spouse in when you file your joint tax return? Are you all the way up to 22? 22? Okay.
Yeah, 22%. But, and that leads to another question. Should I think about bumping up to 24 just to,
Yep.
change that money as an option?
For the conversions, absolutely. Yep. Don't be afraid of that extra 2%. It's the next jump that is the painful jump. And that one comes after 34, and it goes all the way up to 32%. And then you've got the California marginal brackets that you're playing in as well. You know that when you add your Social Security income, and I'm going to guess your spouse's Social Security income, you're probably going to go up a couple brackets, right? At least one?
Right now, my wife my wife is collecting a pension as well. So with her pension and my pension and the Social Security, no, we'll still be in the 22.
Okay. You know what? So And to Brian's point,
well, then now it's hard to compete. It's hard to say, okay, wait, there's a tax advantage versus now versus later. Other than, do you think taxes are going to go up in general or stay lower in general?
Oh, you're asking me?
Yep.
Oh, well, I guess, with the Trump, with Trump's big, beautiful tax bill, we're in a good situation, at least for the next 3 years, right?
Okay. No, I'm not talking about 3
who
years.
knows
I'm
what's
talking
gonna
about
happen
throughout
after
your
that.
retirement. Yeah.
Well, I mean, a couple things to take into the calculus here that I would suggest is require minimum distributions. And another thing is here's my big take on Roth conversions where the juice is really worth the squeeze. And Brian, from what I'm gathering from you, it sounds like you're going to fall in that category where you're not necessarily reliant on supplemental withdrawals from these retirement accounts to fund your lifestyle. Am I tracking right?
Yeah, right now I'm paying for college, so I'm bleeding cash right now. I mean, I withdrew $100,000 this year so far.
Okay.
Just to help cover college.
That's an investment in human capital. So tip your hat to you, my friend. I mean, you're making good, productive members of society that will all benefit from.
I got to throw this in. I'm done in one more month. My son graduates in a month, and then I'll tell you later how painful the whole thing was. But anyway, it's great.
But the beauty of the Roth conversion is where, again, there's obviously the tax-efficient move. That's what we're talking about. And there's obviously some things that you want to pay attention to. Marginal tax rates. Obviously, I mean, not knowing your wife's age, but are you both on Medicare? Are you both over 65?
No, I'm on Medicare. My wife is she's only 63.
How is she getting her health insurance?
I've got health insurance through my retirement, so I do not have to pay any health insurance.
Okay,
the whole family's covered.
That's great. So then we're not having to worry about the IRMA charge or these increased perhaps Medicare Part B charges, which is certainly a part of receiving more income. So yeah, I mean, Brian, I would say this. I mean, if we can effectively thread this tax needle again, not to sound redundant, yeah, those big Roth conversions are going to help you because here's the beauty of it. Then if you can leave that Roth money to continue to grow tax deferred for 5, maybe 10 years, then you're getting significant growth out of that, assuming the market just sticks with what it's done on average on a 10-year basis. That's the beauty of the Roth conversion. Here's another thing that we need to take into equation too is pretty soon, I mean, not pretty soon, but down the line, you're going to be running into required minimum distributions when you hit age 74. Yep. So if you can effectively start to get those pre-tax dollars into a Roth, you're lowering those required minimum distributions. And if there's a loss of life, hate to cover this route, but again, if we're looking at this from the efficiency of every angle, if there was a loss of life between you or your spouse and you still have this high pre-tax balance, your marginal tax rates are getting cut in half, and you're still going to be required to take those required minimum distributions. So it's great from a tax efficiency for you while you're where you're filing jointly as married, or if you're a single filer, or if you and your spouse pass away and leave that benefit to your kids. It's tax-free to them when it's inside of a Roth. So a lot of, if we're just looking at the simple T-chart, pro-con analysis, a lot of pros. The cons are just, hey, when you do a Roth conversion, it's taxable as income. So let's make sure we know what that effect is. But if you're looking at delaying Social Security, in my opinion, great opportunity to keep those Roth conversions going and then delay Social Security so you get that 8% per year benefit growth all the way up to age 70. Yep. Don't delay past 70. There's no point because you don't get any enhanced increase. So 70 would be the highest mark that you're going to look at.
Right, and to recap, to your point, you're saying if I start doing this, I need to think about quarterly payments on the taxes to avoid that penalty you were talking about?
Yeah, so Brian, do you have an accountant or a CPA that you work with, or do you self-prepare?
Yeah, I'm using an accountant, but this hasn't come up before, so I'll have to mention that.
And in theory, you got plenty of time. I mean, we're only November 15th, so you got plenty of time before the end of the year. And to be clear, if you want to execute this Roth conversion, do it within calendar year 2025. But ping them, because one thing you want to take into consideration, you mentioned that you and your spouse are taking a pension. Are you electing any federal withholding from that pension?
Yeah, single on both.
Okay, so then your CPA or accountant can take that into the equation. So even if again, this all depends on the amount that you convert, but they should be able to let you know based on your withholding throughout the entire 2025 that you estimate, and then comparing that to what extra income that Roth conversion is going to result in. They should be able to calculate or get you pretty darn close to say, hey, here's the amount of money that you want to prepay in Q4 which would the date or deadline for that is January 15, 2026. They should be able to give you a pretty close amount. And all that's going to do is just going to avoid any interest or penalties for lack of withholding throughout the year when you file your return. So something to pay attention to for sure.
Okay, that's incredible. Hey, last question. If I were to think about just paying the taxes through the withdrawal of, from the IRA, is there even a reason to do that? I mean, versus spending cash?
Well, the only scenario where I would say, two scenarios is, number one, and you're not in this position, but if you're not in position with liquidity to cover that tax bogey just with liquid cash, then obviously that's a reason to elect withholding at the conversion. The other reason why is exactly what we were talking about, to avoid penalties. I found this out, interestingly enough, is that when you have withholding done from a pension, from W-2, or from IRA withdrawals, how the IRS looks at this is meaning if you're required to pay, like each quarterly period has its own timeline of it where you could be penalized and have your own interest for that period, meaning Q1, Q2, Q3.
They're separate tallies.
Separate tallies, right? Yep. But basically you can circumnavigate that by electing higher withholding from IRA distributions, from Roth conversions. So again, this is where you lean on your CPA or an advisor that you're working with that hopefully can give some insight into the tax planning, where they can say, hey, maybe to avoid this penalty, let's elect tax withholding, or they can say, you know what, we can cover this penalty by you doing an estimated payment, and then you're totally fine.
Okay, so is it best to do like a big lump sum Roth conversion in the fourth quarter to avoid quarters 1, 2, and 3, or?
Well, or just if you can pay the taxes in the fourth quarter, like you were saying, out of the qualified plan right when you do it, then there's an advantage there. But other than that, the problem is the IRS is going to lump it up. How much money did they receive? How much did they pay? Well, they didn't pay enough along the way, which completely, yes, we should protest this as taxpayers. There's no doubt about that, because at the end, we are obligated to pay our taxes. I get it. You pay the taxes. Well, this quarterly thing, you're subject to it because of these conversions. We're just saying be prepared for it.
Yeah.
And you pay it in, you're going to get it back. You just got to work with your CPAs to make it the most efficient that you can possibly do it. But don't make this step a reason to not get it done. And Brian, I would really suggest, because I'm listening to Jeremiah and the great advice and the explanations he's giving you, and I think you should get more of that. If you want to talk to Jeremiah, I would suggest you do so. Do that offline.
Yeah.
You guys can work out that plan, and I can already tell you guys are working really well together. I really appreciate the phone call here on the program as well. 979-59-MONEY is the phone line here. And Brian, if we can speak to you again, let's do it.
Thank you.
Yep. Thank you for the call.
Thank you much.
Yeah, we appreciate it. All right. We're going to take a break. We come back. I got to get into Tom's call. And Tom, who's been waiting patiently, probably learning a ton, just like everybody else, has also got a great question about where do I find financing for a small business? We've got some ideas. We've got lots of questions, too. This is Real Money Pros. Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Have you ever met with a financial advisor looking for some advice just to leave being sold an annuity you didn't want? At Tree City Advisors of Apollon, we do things a bit differently. We focus on your financial goals, helping you fix past mistakes, simplify your current finances, and plan for the future with confidence. Your first consultation is always free and without obligation. Visit treecityadvisors.com and start your journey to financial freedom now. That's treecityadvisors.com.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
And we're back to the Real Money Pros.
We are back. TheRealMoneyPros.com. That's how you find us. We have great partners on this program. Sponsors, we call them, yes, because that's how we get paid. We're not getting paid by selling you stuff. We want to have lots of people listening to this program where you can get live advice, 979-59-MONEY, and make it very available to you. But we also want you to know that it is brought to you by companies that we have vetted out in our practice. So we already know that they work out, and they work out well for our clients. So if you see those suggestions on our website, that's what they're there for, and they also get this program to you to be able to listen to. It's therealmoneypros.com. Phone lines are open, 979-59-MONEY. I'm impressed by Jeremiah's advice. I have been lucky as an advisor to be able to work with Jeremiah for the last 10 years longer, somewhere longer than that, I think now. And he does a fantastic job. So I really enjoyed that last call, but this one I'm going to enjoy as well. Tom and I were talking right before the program. Tom owns a small business. He's a physician. He has a product and a website that they have put together that has value to physicians and their patients and so on. And he's asking the real basic question, which is, how do I find funding? But we can get more of this story from Tom directly right now. Tom, thanks for being so patient, hanging out with us here on the Real Money Pros.
Hey, hi, Brian.
Hi, and
Thanks
Jeremiah too, by the way.
Hey, Tom, how you doing?
Hey, Jeremiah. Good.
So did I kind of introduce it a little bit right, where I was saying, okay, you've got a small business, you got a product to sell. Really, your opening question is, hey, I need to find money, and you're trying to figure out, is it a loan or do you take on a business partnership? Can you give us a little bit of what you're thinking?
Exactly. So we have a service for physicians that is kind of an electronic medical enhancer, a SaaS-based technology, and then we have a product. It's actually a CBD product, so it's in the hemp industry, non-THC, and we manufacture this kind of medical-grade CBD. We're trying to get funding to obviously expand. We're at that point where we have reached a lot of benchmarks, milestones, but we need to expand a sales team, and we need some capital.
Yeah.
That's where we are. I don't want to give away a lot of the company.
No, don't. Oh, yeah. See, and that's actually the reason that you and I were chatting about it, is we were talking about just different ways to be able to source capital. And then I started really asking you a lot of questions about, like, what's the real objective of the company? Is it to sell the software, or is it to sell the product? And the idea really is to sell the product. And And from what I am understanding, is it's like a pharmaceutical. I mean, you'd have to go get a meeting with the physician to get the physician to prescribe it or to use it within their practice, right?
Right. So I mean, I have a very successful practice. My goal at this point in my life, I'm kind of in the later stages, is to do something on a bigger level for more patients than just my practice. We've done a lot of research, clinical trials, and basic research into this one molecule, and it has fantastic therapeutic potential. There's so much science behind it. So, a lot of this is I want to bring this to patients in need. It's an incredible therapy, and it's safe, and we're trying to get physicians on board. And one of the issues is, the connection of CBD to THC and pot. So there's no connection with this molecule with THC. So we want to, kind of market this to patients.
Yeah.
But we want physicians to be involved. We want them to guide patients in the use.
How did you? So when you and I were talking earlier, I said, "How much money are you looking for?" And you said $500,000. How did you derive that number? And is that only to go out and hire like a sales force?
Yeah, that's a good question. I mean, I get it asked that a lot. We've got a lot of investors actually that contacted us and said, "Hey, we want to give you money." And then we've had some, we talked about these people that they want me to pay them $30,000 and they'll introduce me to family offices or angel investors. But they say, the minimum's $1 million. We don't really need millions. We came up with this just based on what the minimum we need to get going, and that would be to start a sales force. And our idea was not, let's hire a huge nationwide sales force. It's, let's start with a person here in Michigan, in the Detroit area, and see how successful we are in using a kind of salesperson going into docs' offices. So we kind of came up with that as not so much that we need to spend that money now, but it'd be nice to have a revolving kind of credit line that would give us a runway.
How is the business structured? Is it a LLC?
It is an LLC. It's a partnership LLC.
Okay, so you've got a partner are you filing S Corp with a K1 or are you doing a Schedule C?
It's an S Corp,
okay.
K1.
Reason why I'm asking is because to take equity positions can be a lot easier. You're filing as an S Corp and it helps with the taxes and the reporting and the K1s and everything. My first concern, and this is a really common thing, especially with startups, which is for the amount of money that you're looking for, you might feel like you need to go out and find somebody else, like an investor that's going to take some equity in your company. And it's one of the things that I really, really want to caution business owners from doing, which is, now that's future control, and it could be a forever dividend that you're paying for somebody to come in with money that does nothing else. And that's the way that you'll look at them 10 years down the road when you're just cranking it out and doing great. You're going to think you're dealing with like Steve Wozniak just hanging out, taking money from Steve Jobs for all those years. Well, that's one of the choices that Steve Jobs made early on. It was a mistake. So a loan probably is going to work better, but then I also want to try to think about why you need the money, and then how do you get the, do you own much as far as like, do you have a way to provide collateral for a bank, Tom? Personal?
I do. I have 2 properties that are paid off. So I have probably about, $2 million in properties.
I know that a lot of times people get a little bit like, why do I have to put up my own personal collateral to get a business loan? Why can't the business stand on its own? It's just because the business doesn't have credibility. It's not big enough. It's not being tracked. And so that's the reason why. The banks, on the other hand, when you fit within the FDIC model and they're giving out loans that makes you eligible for potential loans from the SBA or other programs, meaning traditional loans are probably going to be the best way for you to do it. Nobody believes in your company and your product more than you do, so you putting up personal assets to endorse it is probably going to be the solution. Jeremiah, do you have questions?
No, I think I agree with that. It's looking at the personal, because the fact that your business is relatively in its infancy and maybe you don't have a long track record or showing strong, cash flow or profitability, then, looking at those clear assets that you hold on the personal side, there could be something said about that. And, I think there's a psychological component where maybe you're just a little bit more you're just very more cognizant of like where your money's going, and you're more focused on the system, because that's one thing. And Brian, I don't disagree with you when you talk about, maybe the big lump sum investor coming in and just basically giving you a blank check and what capacity it would be. I mean, if you're just putting money into a system that won't, track long term, then that extra money essentially wouldn't be your solution. So, I think the lending side through a bank, maybe like a line of credit, I like that option a lot. Obviously, if you can get that with your business on its own, I like that path, because there's no equity ownership. You're not bringing in another partner. There's no these other caveats or carve outs to the example Brian gave. So if you just had a clean on its own line of credit that you could tap into and pay it back as needed, I know there's some revenue-based financing options that you can get, but obviously if your business doesn't have a track record or showing that it's producing revenue, meaning I need this money to get to that positive revenue side, that might not be a viable option. So again, your business is kind of an extension of you. So if you're using personal assets to leverage to help cash flow things, obviously I've seen people hit the mark and done very successful going that route, but it also puts a little pressure on you too.
You got to make the banks compete with you as well, or for you, which is, do you bank personally, or do you bank with your physician business in the same place that you're doing with this new venture?
No, and that's one of the issues, because it's a hemp-based. The bank that I use, my personal bank, my personal bank said,
Tom,
no.
Would you be able to stay on with us through the break? Because I've got a few more questions for you. This is going to be a long break because we're going to go into the new hour. But if not, we can chat after the program, whatever you'd like to do.
Yeah, no problem. I do have a 3:45.
Oh, boy. That's your
hard
time.
Stop, but it's
all right. This is Real Money Pros. Stay with us.
Yeah.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of Apollon. Tree City Advisors of Apollon is a DBA of Apollon Wealth Management, an SEC-registered investment advisor and affiliate of the Real Money Pros. The Real Money Pros and Tree City of Apollon are not affiliated with any of the companies or non-advisor professionals participating on this program. Ataraxis PEO and Apollon Wealth Management are financial sponsors of the Real Money Pros. Additionally, Apollon receives advisory fees for these sponsors and or their representatives for investment advice. Log into therealmoneypros.com to contact the host for advice, show archives, educational material, and more. This program is brought to you by the quality sponsors heard within this broadcast.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. Ataraxis partners with businesses of all sizes and industries. Their mission? To reduce the stress and risk that comes with business owners trying to do it themselves. Visit ataraxispeo.com. Ataraxis, elevating businesses for the benefit of all.
Your emotions can drive many decisions, but when it comes to money, they shouldn't be in the driver's seat. I'm Alex at Tree City Advisors of Apollon. We get to know you and your goals to build a holistic, time-based investment strategy. Investing isn't rocket science, but having the right partner helps you stay the course. Learn more about us at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
Are you a do-it-yourself investor looking for ideas from a pro, but not necessarily interested in hiring a pro? Well, I have something to share with you. I build investment allocations for my clients on a daily basis, but sometimes people simply ask if I will share my ideas with them. My answer? Sure. The way I see it, I'm lucky these people consider me to be an expert. So I started writing a quarterly newsletter with model portfolios built for different purposes. My readers get to decide if they want to follow any or some of my ideas. Now, powered by freedomfolios.com and the use of their TD Ameritrade account, my followers can get their investment portfolio in line with my suggestions with the simple push of a button. Using the freedomfolios.com technology is simple and it's fast. I update my models once a quarter, and freedomfolios.com then sends my subscribers a message via email or text letting them know that they may want to update their investment accounts. It's the least expensive way to get professional models without the cost of a pro. Visit freedomfolios.com. See my models there. You can start your free 30-day trial right now. It's freedomfolios.com.
normal?
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
To offer valuable advice and earn clients' trust as an advisor, it's essential to always put their interests ahead of personal gain or the preferences of any particular company. Advisor Insurance Solutions is dedicated to delivering insurance solutions from an advisory perspective. They provide objective and unbiased insurance planning, making it an integral part of their comprehensive advisory process. If you're looking for insurance guidance that aligns with your financial goals, visit therealmoneypros.com. That's therealmoneypros.com.
Are you in the market to buy a house or just looking to refinance your current mortgage? For helping individuals and families achieve affordable homeownership, Academy Mortgage is a first choice. And when finding that perfect loan for the perfect home, you need a company that will treat you like family, not just another file. To help you navigate through today's ever-changing housing market, Academy Mortgage has zero down options available to you. That includes zero down with no mortgage insurance. We also offer medical professional loans and 2-1 rate buy-downs that help lower your monthly payment for the first several years of your loan. Origination, processing, underwriting, and closing and funding will all happen in-house. With over 34 years in the business, we know that buying a home is more than just a house. That's why it's important we protect our customers and safeguard their financial wellness for years to come. Visit us online at academymortgage.com today to start your journey to homeownership with Academy Mortgage. That's academymortgage.com. Academy Mortgage, your first choice home loan lender.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Nobody protects you from mayhem like Allstate. I'm a speed bump. Did you hear what I said? I'm a speed bump. And if you have cut-rate car insurance, the cost to reattach your muffler could really be a bump in the road. So switch to Allstate, save money, and be better protected from mayhem, like me.
Based on coverage and limits selected, subject to terms, conditions, and availability. In most states, prices vary based on how you buy. Allstate Fire and Casualty Insurance Company and affiliates, Northbrook, Illinois.
Running out of gift ideas for your loved one? Send flowers with Flower Fix. And need to create joy in your living or workspace? With many working from home these days, create joy in your space with flowers. Flower Fix is a subscription-based flower delivery service perfect for birthdays, anniversaries, or any special occasion. We offer 2 subscription options to choose from, a text-based subscription or a traditional one. Enjoy these big, beautiful hand-designed bouquets that are delivered straight from our flower fields to your door. Log on now, www.flowerfix.com, to choose your flowers today. Have control over when you want flowers delivered. Weekly, bi-weekly, monthly? Get your flower fix at flowerfix.com. Use code FlowerFixPro to receive 20% off your first order. flowerfix.com.
Hi, I'm Stephanie Gallegos with Price for Life. Do you have a life insurance policy that you'd like to sell? If you don't need the coverage anymore or would rather not keep making the premium payments, visit our website, priceforlife.com. Don't let your policy lapse when you can potentially get a cash payment for it. There are several reasons why a life settlement might be a great value to you. Perhaps your policy is too expensive, or you feel you no longer need the death benefit, or you may think you need to wait until death before your family can get the money from the insurance company. This is why you may want to consider a life settlement. Price for Life has excellent resources available along with a free evaluation process to help you understand the value of your policy and the options available to you. Price for Life's clients have received hundreds of thousands of dollars for their policy when they would have otherwise just let it lapse by stopping the premium payments. Get the compensation you deserve. Visit priceforlife.com today and fill out the case evaluation form to see if your policy qualifies. That's price4life.com. priceforlife.com.
Healthcare expenses can be a burden, so why not make the most out of the money that we'd spend anyway? Take advantage of the most powerful tax advantage account title available to us, a health savings account, also known as an HSA. That's why you need Lively. Visit Lively right away. Open your HSA, roll other HSA money into that new plan, and then start saving. I know you're going to love the entire experience. Visit livelymee.com/pro today. That's livelymee.com/PRO.
Real Money Pros is brought to you by the Real Money Pros and the sponsors heard within this broadcast. Material presented on this program may not be suitable for you. Consult a registered investment advisor when evaluating any particular investment, security, or investment strategy. The views, opinions, or advice offered by the hosts and guests do not necessarily reflect those of this station. Brian Wiley and Jeremiah Bates are investment advisor representatives with Apollon Wealth Management, an SEC registered investment advisor. The Real Money Pros with Brian Wiley and Jeremiah Bates, the weekend's smartest money show. Investing, taxes, legal topics, insurance, and every other confusing money topic made simple.
We are back. This is the second hour of The Real Money Pros, therealmoneypros.com. That's how you find us. You can see us on YouTube. We actually broadcast live the video, all of it. In fact, the phone lines are open, 979-59-MONEY. Fiduciary advisors, it's the only thing we do is give financial advice on a fiduciary level. We don't sell any products. We do sell sponsors here on this program, but we vetted them out. They're companies that we've worked with our clients, and those are the companies that we suggest. You can find out more at therealmoneypros.com. So we're picking up the second part of a phone call right now. Tom calling out of, he said, Detroit, Michigan. Physician practice. He also has developed a product and a software service for other physicians. He said it's in the CBD industry. He's looking for money. The phone call we had started before the program was really, it's just started with, how do I find some money? I need $500,000. And then I was asking a lot of questions. I said, there's some good things in here. If you don't mind calling the program, do that and we can finish this up. Because one of the key components of this is because you said it's in CBD, there's some real tough, it's really tough to get banked, right? So you just mentioned that. And you've got a separate bank than what you've got to use for your physician business. Is that because that bank says that they won't deal with that?
Yeah, my bank just basically said it involves hemp, and they don't want to do it. And actually, there's a lot of banks that don't want to deal with that.
But you find some other bank that will deal with it. Is that bank there local, or is it a national bank? Is it FDIC bank, I guess?
That's interesting. It's a local bank. I'm going to look them up right now.
Okay.
I'm not sure they're I had
there's a problem. Yeah.
Some advisors asked some advisors about this. Banking is a big problem in the whole hemp industry. So I'm not really sure.
I thought that farm bill thing changed that. I thought that was part of that. But I don't know. I don't watch that closely enough. But yeah.
But I still think it's up to the individual financial institutions. It's similar to the 401k conversation of like, hey, we're going to allow 401ks to have alternative and cryptocurrency investments. So it's like, okay, that's great. But the 401k fiduciary actually has to turn that feature on. So even though from like legislation standpoint, they're like, hey, you can do this, I still think you're going to a lot of traditional banks will still likely say, hey, if we do this and there's a whole bunch of operational procedures we need to follow, we're just going to say no, which is probably going to be widespread, which again, to Tom's detriment, it just limits your abilities or paths that you can take to seek funding for your business. I mean, have you looked into any businesses that like specialize in the hemp or CBD industry that could be a viable option?
And you mean banks?
Yeah. Or maybe not banks, but just lenders.
No, so you're exactly right about the regulations, which is why our bank didn't want to do it. And Brian, in response to your question, Dart Bank is a FDIC insured bank.
Then consider moving all your personal and your physician business over to that, and then start talking to them about developing a credit line. See, my concern is that you might be stuck to have to look for another partner, a shareholder that would come in with money. But then you got to get creative on how you're going to do that. Like you might want to put it into the contract that you have the ability to buy their shares at some set price. Just because of the control issue, you've got to have an exit plan designed when the marriage is being designed at the same time. It's just that's where really smart advice needs to come in. But yeah, the funding is quite an issue in this one. I mean, I don't see a perfect solution on this one either, just because of the fact that it's connected to that industry. You said 0 THC, right? It's just CBD. You said hemp.
Yeah, we have a couple other things, but there are a few similar molecules, but 0 THC. So, and it's interesting because in the federal in Congress right now, they're trying to reinterpret the Farm Bill, which has been interpreted to say that less than 0.3% THC is acceptable, but now they want to kind of reinterpret and say everything has to have 0 THC, which will hugely disrupt the CBD industry. But lucky for us, that might be helpful because we have 0% THC.
I've got a lot of ideas in my mind as far as like how would you develop a distribution channel, like who would you talk, but I think it would take up too much time on this program. Tom, I still want to talk to you after the program, and we can have a further discussion about some ideas for you.
That sounds great. I appreciate it.
Yeah, you got it.
I love your program.
Yeah, thank you. And
Thanks,
I
Tom.
appreciate the phone call, all of that. It's interesting, and I think that there's probably somebody listening out there that's already dealt with something similar. And if you have had that, then here, educate us. I'd like to learn more as well. TheRealMoneyPros.com. That's how you find us. You can call the program, 979-59-MONEY. We are taking phone calls on the program throughout the day or throughout the hour. So if you'd like to call the program, please do. All right, we haven't even talked about markets. We haven't talked about much here other than 2 really good phone calls, so we appreciate those so far.
Yeah, the government's open, guys. I mean, hey, the 43 days shutdown is officially sunsetted, where you can see now have hopefully air traffic controllers here. The flight fiascos are down. You know, it's interesting, even in light of that turbulent week on Wall Street, and I kind of touched on that in the first hour of, you know, maybe we're starting to see this tide turn. Market's a little frothy. Obviously, people are paying attention to these technology companies, these AI, these companies that have been riding this AI wave, which has certainly been a tailwind for market growth and investors getting paid for taking on that risk. And now we might be seeing a little bit of a pivot from there. Now, again, one thing I want to make sure that people are very clear on is that if you feel that the movements that we've seen in the stock market this week are making you nervous and they're making you feel concerned about the viability of your retirement plan and your investment plan, revisit the plan, please. Like, just revisit the plan. And if you haven't, or if you create this plan on your own and you feel that it's not it wasn't formed on a good foundation, find a good advisor that can help you review the plan, right? There's nothing wrong with that. Don't let your ego get in the way. Say just, hey, am I doing this right? A little concerned. Because here's the reality. You can expect movements of this is average market behavior. This is totally average. We've honestly, over the past few years, you could argue we've seen a lack of volatility. I mean, yes, we've seen some pockets of it, especially with the Liberation Day and tariffs and all that. We saw, a correction that lasted for about as much time as it takes me to drink a cup of coffee, and we just kept things moving. But again, what I would say is this: it just gives you an incredible opportunity. The best example I can give to you is I met with a client that I've been working with for years, blue collar folks. Just saved money. He was a police officer. The other one kind of worked part-time jobs throughout their career, raised 3 great kids, have grandkids now. They're in their late 60s. And during these years, we've seen some great market growth. And it's something that I tell to all my clients when we're like dialing the whole plan. It's like, hey, if we see, again, following the bucket system, our better bucket system, and we have money in that third bucket, hey, this is money we're not going to touch. But if we see some great market years, it's either we can look at that dollar amount and be happy that it's grown, or we can realize that into how does that money turn into an enhancement of quality of life. So this couple, it's like, hey, we want to buy some horses. Can we do it? They're like, yeah, they're really expensive. I'm like, all right, let's look at the numbers. Great, we can. Here's how we'll fund it. So we got it done. Hey, we need some equipment. We need a tractor. We need some items to upgrade this, and we kind of need a covering for the horses. It's going to cost this much. Well, we've seen another good market. You're great. Doesn't affect your overall plan. And by the way, you can actually spend more than what you're spending on an annual basis. Great. Just reached out last week and said, we want to buy a motorhome for this dollar amount. Can we do it? Great. Let's come on in. Let's take a look and run the numbers and make sure the projections still look good. And they can. So but what that tells you is that if you're properly invested, and meaning your strategy is the tail that wags the investment dog, then you can turn those numbers into quality of life impacts. But if you're not looking at your investments through that lens, it's just like, hey, market's up, we've been doing great, or maybe you were late to the game and you've been sitting in cash, because I ran into this a couple weeks ago where it's like, I'm extremely conservative, but I see what the market's doing. Now I want to get in. I'm like, okay, that is not that's not a good strategy. Let's peel it back and understand where you need to be conservative, where you need to be aggressive. But bottom line is, if you got a good thought out time-based strategy, aka the better bucket system, this market volatility, you just take it in stride. Honestly, you don't need to worry about it because this is standard market behavior. Yeah, you could say there's a lot of catalysts or existential crisis that could come in, but there always has been and there always will be.
I think this is kind of making me chuckle a little bit because that was the most gentle way that I've heard you say that don't walk, but you should probably run to your advisor while times are good and get your plan done.
Yeah.
Because why would you wait until you are concerned and you're seeing the market fall and you've seen the impacts and then you think your motorhome dreams are smoked, whereas you go in while it's good. That was really gentle. That was nice because I think I've had the same message for 25 years, which is why do you wait until it's a disaster? Now, I love it when it's a disaster. It makes me shine as an advisor. I love picking up pieces and trying to reassemble things, but why wouldn't you do it when it's good? And you can call the program as well. This is The Real Money Pros, 979-59-MONEY.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
Looking to make your dream of home ownership a reality? Look no further than Academy Mortgage, your first choice home loan lender. Academy strives to offer the best rates and terms tailored to your financial situation. At Academy Mortgage, you'll be treated like family, not just another file. Navigating today's ever-changing housing market can be challenging, but their team is here to help. Experience the zero-down options, including loans with no mortgage insurance. They also provide specialized medical professional loans and unique 2-to-1 rate buydowns that reduce your monthly payment for the first initial years of your loan. And forget about dealing with brokers and middlemen. With Academy Mortgage, everything happens in-house, from origination to funding. Say goodbye to hassles and surprises. Begin your home ownership journey today by visiting them online at academymortgage.com. That's academymortgage.com.
Academy Mortgage Corporation, NMLS 3113, is an equal housing lender.
Academy Mortgage, your first choice home loan lender.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
And now, back to the Real Money Pros.
We are back. This is The Real Money Pros, therealmoneypros.com. I'm Brian Wiley with Jeremiah Bates. And we mentioned the better buckets. The better buckets is really us. And this is what we have worked on with our clients to find out something that actually works. And it translates into this conversation, Jeremiah, because you talked about if you're concerned about the markets, you need to go in and go. The other one is, why are you concerned about the markets? Like, do the markets actually impact your the expected outcome or what you wanted to get at the end of it? We had this call in the last hour from a gentleman named Brian that was calling out of California. He had said that he's in this good spot. He's 66 years old. He's trying to figure out conversions. I do a lot of woodworking, Jeremiah, and I don't really know how to gauge what I'm doing unless somebody else sees the product that comes out of what I do. And sometimes I don't like showing it because I know where all the mistakes are. I'll give you an example, the cutting board I made for you. I know where every mistake is, and honestly, I want to remake that one, but I needed to deliver it to you. The feedback you gave me is positive, everything else, but what I get from the feedback and from my own, which is I want to improve it, but I also need somebody to take a look at it for confirmation. In many cases, am I doing it right? Am I missing something? Sometimes I'm a little embarrassed. It's like your taxes and giving to somebody and they're like, why are you doing it this way? And I hate it, but in the end, I become more efficient for it.
Well, yeah, and to your point about the woodworking side, it's like, okay, the cutting board, stakes aren't necessarily high, right? I mean, like, unless letting me down, which obviously no one wants to let Jared on. I'm just kidding. But let's imagine you were going to build something that had to be structurally sound, like meaning it was going to be like an awning, like in your backyard that people were going to be.
So I don't hurt anybody.
You were going to be barbecuing under, and you're like, you know what? Like, it feels good, but I should probably bring in a buddy who's like in this industry, or pay someone to say, hey, just go in and just give me your professional opinion on, is this thing structurally sound? Like, will this withstand the rain, the wind, the snow, and all that? Yeah, that's when those things are important. So when you translate this into the financial plan or the Roth conversions and the tax planning and things like that, it's like, yeah, even if you have the right idea, you want to make sure that you're asking the right question. I had a meeting with a client, and it's one of the cool things about being in this business. But when we walked away, he's like, you know what? And it's not like we changed the strategy. I've been working with him for years. It was just more a revisit of like, hey, we're up against the end of the year. The things that we talked about, here's how we're going to execute them. So he understands what we're doing it and why we're doing it. And he walks out of there, and he's done a great job saving. He knows that. I mean, he's a sharp guy. He's like, you know what I really appreciate about this? He's like, the fact that we're on the same page. He's like, I feel good. Like, I feel really good where I'm at. And he's like, if you and your team weren't here, I just wouldn't feel good. And I think that's a lot of people where on paper, if they looked at the numbers, there's no logical reason why you shouldn't feel good. But I work with a lot of people, especially, newer prospective clients, where they don't feel good. And in my mind, I'm like, well, why don't you feel good? Like, here's why you should feel good. And they're like, wow, I never thought of it that way. And it's like, just that piece of its own is like really powerful. Because again, you've maybe spent 2, 3, 4 decades saving, raising kids, putting money into an IRA, like doing all the things that you're supposed to do. And then you get to this point, the crescendo point where you're like, all right, this is all supposed to be great. And if it doesn't feel great, you really got to ask yourself why. And sometimes it is meeting with a professional who's seen thousands of cases, people that are like you have done a good job, who can say, well, here's why. But here's a way that you can make some things more efficient. Here's how you do it. And ultimately, here's why you do it, in my opinion, at least.
A lot of times I've noticed that not only does a relief come, it's also just about sharing the story. And then it's like you get the commiserate. Oh, here's what my concerns are. The cool thing about behavioral investing and something that I've really noticed in the practice is once you really understand what a person values most, then like, for example, they value family a lot, things like that, then you relate a lot of things back to those values so they can understand how it's going to fit. Investing should be a technical thing that you have solved yourself into the reasons why every investment exists inside your account. So then if you know that's the case and you say, okay, I'm in this investment because I'm generating income from it, well, then you hear market news. Let's say it's about Ford and you've got the aluminum plant that blows up and can't provide the F-150s and things like that. But you say, okay, but the dividend's intact and it's mixed amongst other. So I'm not real worried about that. It means you start to learn through education and purpose why you can ignore the news. Well, that peace of mind can actually help with happiness because getting rid of worry and all those things and the fears, and you do it through education, it's just hard to actually get somebody to get in front of you to say, here's what I've got. The reason why you want to do it is because you need the confirmation. If I kept making cutting boards in my garage and nobody sees them, I don't know if they're even usable. I don't know why I'm doing it. I need to do it. I need to hear the critiques sometimes. I need the help. I need the out. Investors, you need that too. Call the program, 979-59-MONEY. That's the phone line. That's 979-596-6639. Now, market news. I do enjoy this stuff. By the way, what was the latest one from Trump now mentioning the use of a 50-year mortgage? Is this a good idea or a bad idea? What's your opinion? I have not heard yours.
So, I mean, it's interesting. I mean, if you actually look at the numbers, I mean, essentially just assuming that you carry the total 50-year mortgage, it's basically going to double the interest that you would pay over that lifetime. And then I was looking at I was listening to a radio show. It was like a radio. It was a radio show where they had an expert come on and they were talking about that. They analyzed the whole thing, and they were going off like median, like average house cost and what the average would be like kind of across the country. And we weren't talking about substantial monthly savings. Like it was like maybe $300.
Yeah.
And it's like, okay, so now you're going to go from 30 to 50, potentially doubling that the interest that you pay in the loan over the lifetime just to save a couple $100. Like, meaning I don't think that's enough to just be transformational to get things moving or get people who were priced out of the housing market to ultimately now get in. I'm just not seeing it. Well, what I did see proposed, it didn't necessarily come from Trump, but I saw someone post it that it was being proposed by the administration as portable mortgages. That one's really interesting.
Okay, and that I agree with. I think it was a great market, great idea for something like that. Portable mortgages, simply just you move homes and you carry your old mortgage with you. It's kind of like...
Yeah, like the terms are the same, meaning your rate, the term, and all that, meaning, yeah.
The 50-year mortgage thing. Okay, there's interest only. That's fine. 50-year mortgage, I get it, because you attract people by the monthly payments. People buy vehicles based on the monthly payments. You probably have found people that are in 84-month payment cycles now with their vehicles, and we could argue that that's dumb, right? Because you're on a depreciating asset, you're paying over time interest on it. On a home, the theory is that the home's going to increase in value. So yeah, maybe it's a good idea because you're pricing it into 50 years ago's terms by the time you make the last one. It goes back down to, what do you value and what was the objective? Okay, I want to move into a home where I'm allowed to paint my own walls. Okay, well then fine. We're going to look at the payment and try to figure out what's going to fit for you because that's your value. You want to paint the walls. I think that the encouragement is going after people that are actually in your generation, Jeremiah, where you don't see and don't really care. You're more interested in experiences than you are about, where you're putting your pillow at night. And I think that might be the encouragement to keep the construction industry busy, and that does help with our economy. But do you think it's a good idea? 979-59-MONEY. If you've got a mortgage, you've probably got an opinion. 979-596-6639. Or have you paid your home off? What is your value there? Share us your thoughts. We'd like to hear it because I've got my thoughts on this one as well. And I think it could be a tool. I think it could be a very bad thing as well. And I'll explain the differences when I come back because 30-year mortgage is very common. Some people try to pay them off in 15. Do you understand amortization in the first place? Like really what's going on with an amortized loan? Well, we'll talk more about that. This is Real Money Pros. Phone lines are open, 979-59-MONEY. That's 979-596-6639. We'll be right back.
As we age, managing our finances can become increasingly complex with ever-changing tax laws, estate planning, insurance needs, and investment environments. At Apollon Wealth Management, their goal is simple: to help enrich your life with personalized, expert financial advice. With a nationwide network of advisors, they're committed to delivering the best solutions for your financial future. It's time to take control and get the guidance you deserve. Connect with an advisor today by visiting The Real Money Pros. That's therealmoneypros.com.
Did you have a tax strategy going into this year to help maximize your tax savings? I'm Jeremiah Bates with Tree City Advisors of Apollon. We consider key factors like required minimum distributions, Social Security, net unrealized appreciation, 1031 exchanges, and more. Because a good advisor should help you with more than just investment selection. Visit us today at treecityadvisors.com or call us at 208-888-1244.
Advisory services offered through Apollon Wealth Management, LLC, DBA Tree City Advisors of Apollon, an investment advisor registered with the Securities and Exchange Commission.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then then used tax-free for all of your qualified healthcare expenses. That's why you need Lively. Our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
If you have a small business, Staples has your sign.
Banners for my bakery?
Staples has your sign.
Oh, posters for my new pet store.
Floor decals for a pharmacy.
Every day, Staples associates help every kind of small business create bold signs to make big impressions. And now get $10 off custom signs, banners, and posters when you spend $50 or more. This is your sign, so print it big at Staples. Ends 5/28. Visit staplesconnect.com/thisisyoursign for details.
Imagine financial advice without a sales pitch to buy something, and imagine a long-term financial plan focused on your goals, not somebody else's, and the day that you can leave your broker because you know how to do things on your own. At Tree City Advisors, we do things a bit differently than our peers. First, we help you define your purpose for investing. We help you clean up messes or complicated financial issues from your past. We help you organize all your financial pieces into something manageable. We're a fiduciary-only firm, and we design simple strategies. And we teach you how it all works without clutter, confusion, or high cost. We can either do your investments for you, or we can teach you how to do them on your own. In the end, we empower you with knowledge, lower fees, and confidence. Welcome to Tree City Advisors. This is the way we think if financial advisors should work for their clients. At Tree City Advisors, we provide flat fee planning and training. We also offer full service asset management, and we employ do-it-yourself technologies. There's never a fee for an initial meeting or review, so let's get started. Learn more at treecityadvisors.com. Tree City Advisors is an SEC registered investment advisor.
You're listening to the Real Money Pros.
We are back. This is the Real Money Pros, therealmoneypros.com. We're talking about 50-year mortgages now, a concept that has been kicked around for years, but now President Trump is also mentioning it, saying, hey, maybe this is a good idea for the economy and for consumers who generally just can't afford to buy a home. So maybe it makes the payment help them fit into an industry that needs to thrive. And real estate, you've got the building industry, materials, all of it. It keeps trucking going. There's so much benefit to seeing the growth of real estate that I question the 50-year mortgage in this very concept, which is encouraging people to stay in the homes for 50 years, not replace them, and so on. Meaning, sometimes these things actually have their own arguments against them right at the concept. Let's go to the phone lines. Calling out a 979-59-MONEY. We've got Ken calling out of Meridian, Idaho. Hi, Ken.
Hello, how are you?
Fantastic. What can we do for you?
Yeah, I think the 50-year mortgage makes a lot of sense. Most people that buy a home don't stay in that home for 50 years anyhow. What it does is it gives them an opportunity to buy at a much lower payment. When interest rates drop, they're going to have the opportunity to refinance the loan. I don't know. I think I'm 74. I've probably bought 6 or 7 homes during my lifetime. And it just makes sense for somebody to, get into it and then not worry about that interest so much or the 50 years.
In 1974, you bought your first home. How much was the home, the loan, and the payment? I'm curious. Do you remember?
No, I don't. That's a long time ago.
Okay. I mean, do you think the house was $50,000 or $100,000? Was it somewhere in there?
I think the first house I bought was around 30. Yeah,
$30,000. Okay, and then you had a loan on it, and it had a payment. Do you think the payment may have been a couple $100 a month, and it was a stretch?
I remember it was a stretch to make it. Yeah.
Yeah. Okay. This is a great reason to talk about.
My income back then was probably only $15,000 a year.
Yeah, and this supports your ideas here, which is, And that $30,000 home is probably not worth $30,000 today, right? In fact, if you looked at the time of the 30-year mortgage, if you went to 2004 and the value of the home in 2004 was probably 3 or 5, 10x the amount that you had paid for the home. So in essence, you were finishing the payments on a 1974 price, but you're doing that in 2004, presumably at interest that was deductible to you. There were tax benefits to you, meaning you were greatly incentivized to take the mortgage, to use it right, and to use it for the whole 30-year period, right?
Right.
Okay,
Right.
but you don't. In fact, most people don't. They will sell the homes, they will upgrade, they'll refinance. So the average length of a mortgage, from what I understand, is roughly 12 years. So
Yeah,
we
about 12
also
years,
then
yep.
benchmark that against the 10-year Treasury. That's the reason why there's a linking there. And so if that's the case, then yeah, a 50-year mortgage, get somebody the home, expect them to refinance at some point. But what banks are going to take a 50-year mortgage at a set rate? No investor in their right mind is going to set aside money unless you're a government entity. And that concerns me of why that would even be mentioned, which is this is a way to refinance the government right now. The Fannie Mae, Freddie Mac that are holding all of these mortgages right now at these really low refinance rates that people had gotten 5 years ago at 3%. You've got to incentivize these people to try to leave those. Otherwise, the government's holding on to this really low interest debt. So you come up with this idea. So the plan, in my opinion, benefits the government more than it probably benefits a consumer. However, having another option out there, I think, is great. But I think it could be a detrimental thing for people if it's not used well. Does that make sense, Ken?
Sure.
I'm mixed on the whole thing. I mean, I really am. I'm mixed about the purpose of it, the whole thing. But yeah, you're right. I like the idea of mortgages, home ownership, all of that. And this is another way for people to get into them. And you're going to pay for it, but you're paying for it at lower rates that may be deductible to you. So there's a lot of benefits to it, a lot of drawbacks too.
Right. Well, and you end up getting, the appreciation of the home.
Yep.
Also gives you the ability when you turn around and buy it to have a down payment on the next one. I think the first loans that I took for houses, had those options or those benefits of having the government, kick in, so you didn't have to come up with a 20% down or whatever.
That's right. And Ken, thanks so much for the call. And I will tell you right now that I agree with you on this. Now, when people take on these big loans on these homes, they have maybe their objective is to move into the home. You just have to know what those objectives are, whether or not, it's going to end up working out to be a good decision for you.
I would say this: if someone's going to hold on to that loan for that entirety of the 50 years, I mean, to Ken's point, and we've seen it, Brian, like working with clients. I mean, that's one of the biggest causes of the wealth effect that we have in America is that you have people that bought homes a long time ago.
It's all talking about leverage. It's like the responsible use of leverage.
Yeah, and there's a tremendous amount of equity in that. But if you got a 50-year mortgage where, again, you look at the interest, I mean, you're more so than doubling the interest that you would have on a 30-year mortgage. So, again, if we're comparing apples to apples, yeah, no, I mean, you're not going to have that level of wealth effect. I mean, I think you got to look at all of it. It's like, again, with this 50-year mortgage, like, what are we actually focusing? Because it's not a solution. There's trade-offs. It's a T-chart. There's pro and cons on both sides of the 50-year. I agree where having more options, another ability to something to spur someone that has the ability to get home ownership, I'm a fan of. Is a 50-year mortgage the blanket solution to that?
No.
I don't think so. I think you need more inventory. You need better pricing on homes. Like, that's what's going to move the needle the most.
Just think about like replacement. So I think the depreciation is 30 years on a home residence, 27 or 30 or something like that. So it's planned replacement at that period. So the length of the mortgage. So now they're going to have to change the timeline to fit 50. It's going to have to fit 50. Well, then you have a problem with, what kind of failures do you have in the home at that point? So use of leverage. Use of leverage is you get to control something really expensive that you generally don't want to put all your money into. And you got to think that whatever is sitting on the other side of this is now sharing some of the risk. Because if you have a complete failure on the property, you had to walk from it, then maybe part of that is, well, good news is the bank owns a good portion of it still, so I don't take the complete financial hit. This is a reason to think about how you use leverage. One of the failures of the banks, they didn't see it. I don't know what happened. I don't know why they didn't see it in 2006, 2007, is they were taking loans from people that had no income to be able to repay it. They were getting paid to take these loans. And then these people, oh my gosh, are doing the immoral thing of walking when they couldn't afford to make the payments and sticking the banks with it. And the banks are saying, well, our investors are losing money and everything else. Well, they took that loan as a risk and experienced the risk part of it.
So I got a funny story about that. So my buddy, so this was 2007. My buddy goes in the bank and he was just going there to do it, I think deposit a check, and one of the mortgage officers are in there is like, hey, young man. He's like, yeah. He's like, you ever thought about buying a home? He's like, that thought has literally never crossed my mind one time. He's like, well, come on in. Let's take a look. They ran the numbers, and he calls me. I mean, he was telling me the story, but a few weeks went by. He's like, hey, I'm like, catching up. What's new? Let's go hang out. He's like, I bought a house. I'm like, you what? No. He's like, yeah, I bought a house. Now, lucky for him, I mean, he had, he was one of the guys in the friends group that at a young age got a good paying job. So, I mean, he was one of the ones that was like, I guess, the success story out of that. But yeah, it just cracked me up where I'm like, yeah, if we were experienced that in like our own like little friend group of my buddy, I just never forget. He's like, the guy just walked up to me and said, hey, have you ever considered buying a house? He's like, no, that thought has literally never crossed my mind. He's like, well, come on in. Let's look at the numbers. And that's obviously how we ran into that whole fiasco with the great financial crisis. That was just done multiplied times 100 across the country.
As opposed to renting, if something goes wrong with the property, you call the landlord is going to be responsible to fix it, or you walk, right? So it's kind of leveraging your ability to not have to be responsible for something like that. You get to choose where you live. There's benefits and drawbacks to both. With the standard deduction sitting where it is on your taxes right now, the mortgage interest is kind of a moot point. Then you got all these mortgages that are tied up at 2.5% to 3.5%. They're all government owned by Fannie Mae, Freddie Mac, and there's got to be some way to unload those. This is an incentive to do it. So I'm looking at the political motivations, plus to appeal to maybe the really tight, financially blue-collar crowd to get them to now appreciate the legislation that gets created or whatever from the presidency. Like, it's a political move, but from a financial tool standpoint, yeah, I'm fine. I'm fine with it coming out. I see that it could hurt some people. I could see that it could be beneficial to some people, but it still goes back down to what is it that you're doing it for, and is this the wisest way to do it? You've got to remember, mortgage insurance is another part too. So if you're already payment conscious, I'm going to guess that your down payment is also a problem, which could subject you to an additional payment that you wouldn't have to pay if you had enough of a down payment. So this still goes back down to what's the plan? Like, is it better to come up with the down payment money? All of it.
Well, this is also under the assumption, again, that you have this generation that, which you could argue my generation is, what level of priority are they putting on buying a home? Yeah. And, I mean, my own anecdotal take is it's not in high consideration for a lot of people that I talk to.
Trips to Hawaii, yeah, like people like their
they want freedom, they want flexibility. They don't want to be a slave and be beholden to their 30-year mortgage payment where they can't do anything.
Or their job may change locations and need portability. 979-59-MONEY. You got thoughts, you got concerns, you got a money problem? Call the Real Money Pros. We're here for you. Jeremiah Bates. I'm Brian Wiley. We'll be right back.
Businesses today face a barrage of challenges. They hunt for top talent, the search for the right benefits package, and the ever-rising tide of healthcare rates. And putting together the right team to run your HR-related tasks can be expensive, let alone time-consuming. Enter Ataraxis PEO, your professional employer organization ready to tackle all your HR needs, from payroll to benefits administration, payroll services, workers' compensation, and talent recruiting. They've got you covered. With Ataraxis, you gain access to a team of experts who handle the nitty-gritty of HR, freeing you up to focus on what you do best, growing your business and growing your revenue. Ataraxis takes the time to learn about your business, crafting personalized solutions to help you and your team succeed. So say goodbye to the stress of HR administration and hello to Ataraxis. Experience the power of a true business partner with Ataraxis PEO. Visit ataraxispeo.com. That's ATARAXISPEO.com. Ataraxis, elevating businesses for the benefit of all.
I know you've been waiting a little bit longer than normal.
Jen's manicure spot needs an extra pair of hands.
Who's at the front desk right now?
Someone who's handy with everything from nail files to spreadsheet files.
Deidre's not coming in today, but we have that whole bachelorette party.
Indeed can help her hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality candidates whose resumes on Indeed match your sponsored job description. Visit Indeed.com/credit and get $75 towards your first sponsored job. Terms and conditions apply.
As a financial advisor, I often see that many families I meet with end up paying way too much money in taxes. If a healthy family has an insurance plan with a low deductible but high annual premium, why wouldn't they look at a high deductible insurance plan instead? They could save on their premiums and put those saved dollars into a health savings account, also known as an HSA. It's the most powerful tax advantage account title available to us, so why not use it? Take advantage of pre-tax money that could be grown tax-free and then use tax-free for all of your qualified healthcare expenses. That's why you need Lively, our favorite because it's simple, fast, and free. I use it, my colleagues use it, and I recommend it to all of my clients. Visit Lively right away. You can even roll over your existing HSA money into this new plan and start saving right away. I know you're going to love the entire experience. Visit livelyme.com/pro today. That's livelyme.com/PRO. Lively is a proud sponsor of the Real Money Pros.
Back to the Real Money Pros.
We are back. This is Real Money Pros, therealmoneypros.com. You know, you can see us on YouTube. You can find us online. Go to the Real Money Pros. We have our advertisers there. Sign up for the newsletter. But the most important thing in the end of this one is that the markets have run up accounts and values. Like, take, for example, people that have a linking to a stock that maybe have gone up a lot and they own a bunch of that because they work for the company. I just really want to say that I would prefer to see you while you're healthy, while everything is great. You think that everything's great, confirm your plan. You're going to feel better about it versus waiting until something gets smashed and then you're wondering if you can make your goals. Why not know and understand the goals first? So we talk about better buckets. This is a system. It's a visual system that investors will use in conjunction with their planning. It doesn't cost you a nickel. You could watch the video that I've made on it. We explain it many times on our website. You can take that information and then apply it to your own investment profile and plan moving forward. But usually you need confirmation of, am I in the right places? Did I calculate myself right? Meaning you could hire a coach. We could do it as coaching. Our team could do it. The Apollon Wealth Network team members could help you confirm your plan, or you could have somebody actually grab the helm and take control. You just kind of figure out what kind of advice is going to provide the best way for you to achieve your goals and do it peacefully. We talk about tax strategies, things like that. This is the technical part of it, but to take the fear and the mystery out of it usually involves some level of education. Now, when we talk about the fiduciary side of the business, now many people work with people that will give advice and then they'll translate that later to the products that will help provide the success for them. And they're actually going to get a commission from it. It's conflicted advice. It's conflicted because you have this product to sell. You got to fit the client to the product. So you do the plan that fits them into the product. Next thing you know, you've got an annuity. If you made a mistake, whatever it might be, you got to figure out what to do. Well, that's what we're suggesting here on the program, which is there are professionals out there that understand taxes and estate plans that will understand you, your investment ideas, your goals, and help you get there. And the only way to do it is just take the first step. Well, you're hearing about our process right now as I'm explaining it. So I would encourage people to go to therealmoneypros.com, and we'll connect you to an advisor that uses this type of process for their clients, to include us. So if you want to read more about our practice, it's treecityadvisors.com, or you go to therealmoneypros.com. It's the same network, and we can help connect you. But do it while it's good. It's so much better to have these conversations when it's good. I understand sometimes it's just kind of like an interview, a confirmation. You can have that. It's usually free. I don't know anybody that should be charging for an initial consultation. It's really trying to figure out if you like somebody. It's like when I heard you talking to Brian the caller earlier, I'm like, you guys have great synergy. You should chat after the phone. Just saying.
Yeah, no, I mean, we're in a good position where you can work with clients that you want to work with, and you want to work with clients that want to work with you, not that someone who feels like they need to work with you because you got this secret sauce that's going to just be this magic fix across the board. That's not necessarily the case. But so on the topic of the buckets, time-based investing, and how these things all coordinate, we actually got a message via the chat feature on therealmoneypros.com. So again, if you want to use the chat feature, if you want to use the Ask the Experts feature, go to the website, therealmoneypros.com, if you're hesitant to call into the program. But this is coming from Doug, and he asks, I'm curious of how you decide when you can start drawing from your third bucket of money since you don't know how long you will live.
Drawing, I'm going to guess he's saying it's almost like, when do you start taking something from there? Well, first of all, I'd take profits and I'd put them into the income bucket, and then you take the income bucket and you put it into your liquidity bucket, the stable bucket, and that's when you actually take it out. So you start taking when, one, is you need it or you want it, and you have the ability, and you're not going to affect your long-term plans.
Exactly. I couldn't have said that better myself. I think anything I would add on to that would cause a bit more confusion. But again, the beauty of this is that you have the option. Well, I mean, let's imagine a scenario, and we have a lot of clients that are actually in this position where you've retired and you fortified your bucket system, let's say like in 2016, 2017, and you had already planned out that you needed this much in your bucket one, so your liquidity needs were met. You had this much money in your income-producing bucket, so your income needs were met. Maybe in conjunction with a pension or Social Security that you had, so everything's tax efficient. Your cash flow plan is dialed in.
Your needs are met.
Your needs are met.
Now your wants. Let's talk about the wants.
Yep. So now you're looking at your third bucket. So here we are, 2025, and if your third bucket was invested appropriately, the right way, you should have experienced some significant gains since that time. Then yes, you can recalibrate the plan, meaning your quality of life should be able to enhance. That's the whole reason why you're investing your money in the first place. So to Brian's point, you have options, meaning you could then take that money, go put more money in your income bucket, meaning it's generating more passive income, which makes your cash flow look better. I would argue that's an enhancement in quality of life. Or you could be like the clients that I met with earlier this week of, hey, they want to buy a $70,000 motorhome. Perfect.
And those were their wishes. So, meaning your wishes just got met, so you might as well take it. The problem is, it's like this bird in hand, two in the bush thing, which I can get more. Well, what is that? That's greed. And then we're talking about behavioral investing, which is this idea that, so when you take it, one is you'll never take directly from the third bucket. The idea is we want you to flow it through the buckets logically to go to the income bucket. Should I buy more income? No, I'm going to pass this through the stable bucket, then I'm going to spend it. You're creaming it because you've actually made something on it. So Jeremiah's clients, for those examples, all the way up to the motorhome, which is, yeah, you've had that good of a year, go ahead and do it, and it's not going to affect your needs. So because it's not going to affect your needs, it gives you the ability to decide. Now, Doug, you're in a great spot because you're not in a forced decumulation situation where you already know the schedule of when to take the money out of the growth bucket and convert it to the income bucket, because that was defined inside the plan when you had to do it. You're talking about extra.
Yeah.
That's a great spot to be in. And the answer is you take the extra when you see that you've got one of those wishes or wants that you can accomplish. That's when you take it.
Exactly. Yeah, you see what tail is wagging the dog here. I know I use that term a lot, but it's a clear explanation of like how this bucket system effectively works for real life. Like you have needs, wants, and then you got that wish. And that wish may be mountain home or a home up in the mountains, a motor home, a vacation home.
Like, yeah, whatever it might be.
Whatever it might be.
It puts a fun part back into it. That's the whole thing, is when you said, how do you feel? And a lot of clients, I don't feel good, or a lot of people listening to the program, which is, I don't feel good. Usually it's then through a discussion you start to feel good. It's like me handing you the cutting board, which is, as soon as you looked at it, man, I felt great about it. Like literally it took away everything. Like you were so nice and complimentary about the work I had done in it. I could have pointed out the problems. I was hoping you wouldn't notice them. But
I still haven't used it as a cutting board. It's like a decorative art piece in our kitchen.
Seriously?
I'm afraid to cut. I'm just like, it just looks so good. The wood's grabbing. I'm like, we don't.
No,
need to
I
be
can't
putting
wait till see it.
metal blade on this.
Worn out. I can't wait to see it when it's worn out, and I'll run it through the planer. It's only going to get better every time I plane it down a little bit more. I did a whole bunch of inlays in it, so in case you're wondering on it, it's like 7 or 8 different types of wood, and I did their family inside of a inlays on top of a. It was a big project.
It was well done.
It was fun.
Very well done.
But it was the confirmation. You probably need the confirmation as well. Just make sure that you're in the right spot for your plan. If you don't even know what the plan is, and you've already got somebody you're working with, I would say that's a problem.
Well, yeah, and it goes back to
what are you paying for?
It sounds easy when we talked about, okay, the client wants to spend this amount of money on a motorhome. It's like, well, we're diving into everything. Like, we're going to, not only are we giving confirmation that they can do this, but we're also going to have a clear understanding of what the impact of that removal is going to do to the entirety of the plan. But in that analysis, in doing that with the client, talking everything through, that's how you arrive at this feeling good.
Okay,
right?
I have an idea.
It's just clear education, understanding of everything that's moving.
For next week, I just realized that in our studio, we've got these 3 cameras. One of them picks us both up with our sign behind us. I'm going to replace that with a whiteboard, and we're going to do buckets. Sound good? We'll do it visually.
That's a good plan.
Yeah.
Like
so you'll be able to see that. You can go find us at therealmoneypros.com. You'll be able to see that next week. We'll do the buckets visually, and we'll show how you actually take your numbers and solve yourself through these buckets, because then the buckets will translate exactly how you invest the money, which then will help you understand when you should pay attention to the news. And what does that news mean to you? It may not affect your buckets. It'll help you with understanding your statements, maybe even help you better understand how your advisor's been working with you. Go to therealmoneypros.com. Be ready for that. That'll happen next week on the program. And until then, we do appreciate you listening to this program, even more so if you interact, whether it's through emails or chat or phone calls, or just send us a message. Tell us what you want us to talk about. This is Real Money Pros.
The Real Money Pros is hosted by Brian Wiley and other team members of Tree City Advisors of